Welcome back to the Eric Krown Crypto channel. Today, a very special day, joined by a good friend of the channel, a good friend of mine, Mr. FiboSwanny, and he's been on here many a time. He's been updating his long-term model, of which I wanted to check in on because September is a big date with a lot of things, well, a lot of things occurring, a lot of confluence in the overall outlook. So with that said, I think it's time to hand it over to you, Mr. Swanny, and show us what you're looking at.
All right, man. Well, thank you for having me on. Besides all the my day job doing a lot of European energy markets, as you probably well know, your energy bill is probably a thousand times higher than what it usually is.
But you're goddamn right.
So, but yeah, basically energy and Bitcoin and disc golf has been my life for the last couple of months. So that's me.
Oh, my man.
So that's what I've been doing. Let me share my screen. Yeah, I really want to touch on. I'm going to look at a bunch of different time frames for Bitcoin, and if I can find my thing. Hold on one second. I was having a little bit of a.
No worries. No worries. And while you're getting ready,
I think I got it. I think I got it.
There we go. All right, let me bring it up. Here we are. There.
All right, cool. Yeah. I'm really going to touch on some different time frames, but I really want to look at the price area that I'm looking at for a possibility in the September timeframe that I've been. I think the last time we talked, I started looking around June, and even though we hit that 17.5 low, which I bought, that was the last time I think we probably talked. I was looking at that as a nice trade to the upside. We actually sold that out pretty close to the top around 25, and I'll show you why.
Beauty.
But then that September timeframe was still in play until my daily would get back to a bull zone, and it hasn't yet. So to me, that September low, and maybe it might not even be September, but all of my timing stuff looks at September as that possibility of a kind of a pivot time. So hopefully that'll happen, but we'll have to see. But let's start off with the 4 hour. For anyone that doesn't know me, one of my main things that I deal with is what I call threshold theory, and it's my way of kind of manipulating the RSI into bull and bear zones, and it's something that I look back historically and do some analysis using the RSI, the ADX, a lot of different fib levels, trend lines. It takes a little bit of experience to figure out where those zones are, because one of the main things that I'm trying to do, and my main goal is to measure the psychology in the market. I'm trying to figure out where that mindset is changing, and I use the proportions in the fibs to, along with the RSI, to give me that sense of when that mentality is changing. So I do it a little differently than most when it comes to the RSI, because I've heard a lot of people going, "Oh, the RSI sucks and you shouldn't use it." But one thing I've kind of learned was over the years is just like to accomplish something different. I found that I really like fibs, and I just wanted to like pile in and learn a different way and take an indicator a little step further, and that's what I've kind of done here.
Right.
So when you see a bull and bear
I would
zone
actually just
here,
like to. I'd just like to add to that for a second. You know, of course, there's always people who say the RSI sucks, whatever. But the thing is, at the end of the day, man, you've been in this game for more than 20 years. And I think that just kind of speaks for itself, you know? And most importantly, we have another professional trader here, Mr. FiboSwanny. What is he doing? He has a systems-based strategy, which I can't highlight enough. The more that I do this, the more and more that I have that conviction that, you know, yes, you can do it with price action, you know, not backtest and everything. But with a system like this, you know, it's very obvious when you should be getting in and getting out. And that makes it very easy to test things and very easy to find out where you went wrong and where you went right. And that's one of the things that I absolutely love about you, and just an amazing, you know, sort of person to be bringing on a channel like this to kind of show the way that you look at things.
Yep. And thank you. And I also like to see when other people's analysis correlates with what I'm looking at. So when that kind of gives a little bit of a strength, because you look at it from a completely different angle than I do. And when ours match up, I kind of like that. You know what I mean? So
usually a good thing.
yeah, usually a good thing. Yes. Unless everyone's looking at the same thing, then it becomes.
Yeah.
No, I'm just
there
kidding.
You go.
Let's start out with a 4 hour here on Bitcoin. And I'm really going to touch on Bitcoin. Maybe we'll talk on some, the dollar or the S&P or whatever later if we need to. But the what I'm looking at here, my bull and bear zones. We went into the bear zone back on August 17th here. So this was an area that was a sell signal that we would go into the bear zone here. One thing that I've been following is what I do is I take the fibs and I move them down as price moves. So as you can see, as it got down, whoa, it's being a little touchy here this morning. When it moves down to this point, it works its way back up, and this is that 38.2% is what I call the shallow fib. So this actually moved down into a trade, came back up, and then sold short again to the downside, and made a couple trades here to the downside. Not much, just kind of riding the downside. But as this moves, I move my fibs along where things are going on the lows here. So, man, this thing is really weird this morning. Well, it's like jumpy. Start at the top. So when I look at this moving from the bull zone to the bear zone, this to me is the psychology change in the market right here. Could be used from other traditional things. Maybe it broke a trend line, maybe those kind of things. But this is that area that I'm looking at as that area to break down. And so far, on the low that we've had, the shallow fib at the moment is at 21.1. So that should be some resistance if that hits. But there's also some other areas that I'm looking at on this chart that that comes into play. One thing I also do for extensions and try to figure out some other targets is I always look to see where the lowest low is in history. So far, this breakdown right here has not broke a new low under here yet. It actually wicked down a couple of times, but I like to see at least 3 consecutive candles to where I would move those fibs down a little bit right here, where I'm starting on this 100%. So in other words, what I'm doing is I'm taking this low up to the high, and I'm looking at extensions to see an area that I would possibly consider buying on the downside again if it starts to come down. But however, I don't really like that at the moment for a couple of reasons. One, this 100% level that we have so far is this 100% is at 24.75, which brings in resistance right here. So if you draw this line over a little bit, you should find some selling interest right at that point, based off of this, this historical move to the upside, and hasn't really broke this low down here yet. So this right here becomes resistance to me. Another thing that I'm looking at here is if you just take just a normal fib from very low to the high, like this, you'll see the 61.8% of this low to the high is at 24.88, which matches up really nicely with this low, which is right here at resistance. So if this is going to be playing the way it should, a break of the 61.8% level to me is another psychology change, that if you were a buyer along this line, and you got that pressure from the sell side, I always talk about trench warfare. This trench right here was to be held by the bears to go back to the upside, but the sellers came in and said, nope, I'm taking over this line. You go find somewhere else to set camp up. And right now, the sellers are still holding that line with some selling interest here at the moment. So what happens is, if this 61.8% level breaks, which it did, at least 3 settles right here to the downside, the 100% level becomes a target. So I don't really like the fib extension of where I would buy. I would almost wait for a retest of this previous low, and maybe even a little further. And I'll talk about that here in a minute, on why I would think it go just a little bit further into a little bit of a lower low in September. So if you're just
to clarify, one moment, just to clarify, you're talking about the 17,500 low, correct?
Yes. Yeah. This low that we had back here in June. I'm really just looking at this move from 17 to 25, and then we're breaking back down. And since we got back down below this 61.8% level here, on the retracement back to the downside, and it broke, if it holds here, basically it should come up here, retest, and that's what it's doing, then work its way down to a full retracement, because the sellers are probably owning this line. Now, if it breaks back to the upside, my model comes into play where the threshold is at 21.1. So this actually could wick up to this shallow fib area, and that would be my sell to take short into September if that happens. But if you wanted to front run it off my model, this is an area of selling that might be an opportunity to the downside at the moment. So right now everything's still in the bear zone. We do have a little bit of a divergence here, you know, off the lower lows, and then the RSI didn't make a low here. I'm not real thrilled with that yet based on the daily movements, and I'll show you that here in a second. But right now I'm just looking at this 4 hour as a little bit more of a downside opportunity, as long as this shallow fib holds and this resistance holds. Now, if this breaks back up into the bull zone, then I'm buying it and going back the other direction. But right now we're still in this bear zone. So downside opportunity on the 4 hour. So I'm still, you know, watching that movement. And the reason I don't like this fib extension as that first buy, and maybe looking at the lower, at the, you know, the previous low or even lower, is when you look at the daily. So if I flip over onto this time frame, one thing that we had here, we had this bear zone. We played this to the downside here because it, you know, this stayed in the bear zone the whole time, popped up into the bull zone. But the way my model works is when you break into a bull zone like this, the first thing is the RSI break, but then the next thing is you have to break above the previous shallow fib. So this bear zone here had a previous shallow fib from my threshold to the low right here. So this previous shallow fib was at 27. And to me, this move to the upside at this point wasn't really a buy for my longer term trades, because even though it went into the bull zone, momentum, the ADX that measures trend strength, was really low. It kept it in a more of a consolidative phase where it popped up here. And based on some other things, we sold out of this move to the upside here to get back short because the 4 hour went here. So as we were, you know, working our way up here, and then it broke down on the daily or on the 4 hour here. This was the sell signal on the 4 hour, which on this, at this point, it was telling you around this area was, okay, it's time to get out because the 4 hour is breaking down, and the daily was not breaking the previous shallow fib. So if we would have broken this to the upside right here on this move to the upside, then I would be just all bullish and all crazy and ready to back up the truck. But that didn't happen. So it's still, so once it went in, so once the daily went back into the bear zone here, I just marked this risk zone here, you know, this triangle that we're working to the downside. And right now, the fibs that I'm looking at the moment, the shallow fib is at 20.9 on the daily, to where we could find some selling interest in here. It's also near that previous low of the 100% here on the daily. So the resistance is going to come in at around 29 for the daily. When you look at the 4 hour, it's at 21.1. So it's pretty close to that same area of possible selling interest to keep us in this move to the downside. So even if this daily stays in the bear zone for a while, that's why I'm really looking at this move to the downside into September as a possibility. So a couple of areas. I look at the previous shallow fib here, or the previous threshold. And once it broke the 100%, that first zone that I like between 127 and 141 is that area that could find some buying interest. And we did find that a little bit of buying interest and popped us back up as we touched that zone. However, with being in the bear zone like this, momentum is still starting to stay with the bears a little bit. It's still giving me that sense that we could break down, and that risk to that downside into September is still there. The number that I'm looking at is going to be around this 16.3. That's the target that I'm looking at. It's a little bit of a zone between 16.3 and 16.7, and you'll see on these other charts of where I get that. But one thing I'll be looking at is this 18.9, 18.910. Three consecutive daily settles underneath this 18.9, and 16.3 becomes a target for me. So that it opens up this range in here. Now, of course, we got that previous low that might bring in some buying interest, but we could also wick down into this 16.3 and come back up in September. And that's what I'm kind of watching for that possibility. And I'll show you why I really like the 16.3 as we move into some of these other time frames. So right now, daily still negative, to the downside. One thing I'll be looking for is, a new bull zone, of course. If it gets back into the bull zone, I'll be buying. Another thing would be is if it actually breaks this trend line that I have on here, it might be a front run, but I really might. I'm not going to be doing anything based on my model until we break this previous shallow fib of 27. So even though if we get down in this area and break to the upside, you might want to front run it a little bit on a break of the trend line, but I'm probably going to be playing it conservative and not really buy a lot for my long-term trades until this previous shallow fib at 27 breaks to the upside. So downside for now on the daily with that 16.3 as a target. Now,
so just to clarify before you go on, basically for you long term, because I know a lot of people are interested in long term investments and whatnot, 27.5 or so is kind of like the line in the sand for you to hey, it's no longer major pressure to the downside on the higher time frame. It's time to be looking for potentially some longer term holds here.
Yeah, exactly. I trade I trade basically two different books. I have a short term book and a long term book. And
beautiful.
My short term trades are off the 4 hour. So if this actually if this breaks into the bull zone, that's going to be a little bit more money. Right. I'm going to go long on my short term trades and play this play the fib model. If this actually breaks on this one, that's when I actually add to my long term book, and it's based off a different different dollar buckets basically. Yeah. So if I have a certain amount of money that I'm sitting in my short term, and then I have a certain amount of money in my long term, and then I break that down into 10% ranges. So if you have $100,000 sitting in there, and I take 10%, I'm going to buy 10 grand of 10% of that short term or long term, basically whatever that bucket is. It's kind of hard to explain, but I basically run two different time frames. So my 4 hour will probably get me in earlier than my daily will, of course.
But naturally.
Yeah, so I'll trade my 4 hour in and out. The daily is the one that usually lasts a lot longer. Hopefully, when it breaks into the bull zone, it tells us that we should be on a trend, and we want to ride that trend. So that's what I'm kind of looking at. But right now, it's still giving me that downside risk that I want to kind of keep there and respect. Going on to the weekly, I just wanted to show a couple of things that I'm looking at here. We got a couple of trend lines, a couple of lows down in here, and these lows they wicked a couple of times, but this one right here is one that I'm looking at. And then there's a couple other trend line breaks that I was looking at some measurements here. Just off of this trend line, this break to the downside, you take the highest point above the trend line to the trend line, take that same rate of change, and it gives you this area right here. And then as it broke down, it gave us a little bit of a, I don't know if you call it a flag pattern or whatever, but even if you take this small trend line here and measure the same way, take the highest point to the trend line, that break measures down to this point. And then also I like the intersection of this trend line here. And then also when you look back here, yeah, we had a couple wicks up in here, but if you basically take the top of this and you move it over, it all kind of matches up pretty nicely around this.
So the validation before the breakout in 20, all of those match up basically.
Yeah. And what I'm looking at is maybe we're getting a little bit of a retest of this resistance, and then it works its way down. This line's just basically the end of September. So all of this kind of works out to where, 16.3, 16.4, somewhere right around in there, which matches up nicely with the fib, my fib theory break point on the extension comes in at 16.3 here. And then I'll show you some other ones, but that's another reason why I like 16.3 here. Not that it can't go lower, but that's that first level that I'm really thinking that could be a spot to do. When I looked at my monthly back in June is when this was breaking down. And once this broke down in June here, that was the sign that we could go into this September low based off of these previous lows that we've seen here in history. It's the timing of this is still working pretty well to where September's that.
Can't argue against that. I mean, that's picture perfect there the whole last few years.
Yeah, and it's worked so well. So I've been kind of keeping it as a something to watch. This was my threshold spot. So this right here is your extensions, which is basically between 12.1 and 17.8. But if you take the breakdown, so this is the point where the trend where the previous low broke on this candle. So if you take this move to the downside like this and just take a trend based extension off of this, you have 16.3 as your 61.8% level of this move to the downside. So that would be that first spot I would look for a September low. Now, can it go down to 10? I don't know. I don't know if it'll go that quickly, or, you know, maybe different timing. But the next low on this, based on timing, isn't until December of 23. So that could be something to consider later on. But right now, let's focus on this one and see if we can get that September low around that 16.3, 16.4 area that I'm looking at. So timing's working on that.
I mean, it also makes sense just theoretically. Sorry, I don't mean to cut you off, but theoretically speaking, it seems to me that all of those sine waves, I believe they kind of correlate to basically the end of the quarter. And, you know, if you're like a big money manager, you have to rebalance your portfolio at the end of the quarter. So it would kind of make sense that major highs and major lows typically happen around, you know, those sort of times. Typically, you know, September, October, December, January, these sort of times get hit a lot, it seems like.
Yeah. I just put the sine wave in there to kind of show like some of the highs and low. You know, there's a little transition here, but you got a low here, another transition to a high here. So it kind of gets into this kind of a little bit of a play. This is actually the time frame when it broke to the upside with a new high, and then this was a low. So it kind of works. You know, I just put it in there just for a visual. But again, I like what you're saying. This sine wave kind of matches up with the timing of this. So when lows and highs could possibly happen, and we're coming into a low, so that makes sense when it comes into that timing. Another thing I'm looking at, and again, this is Elliott wave. I don't trade off of it, but I do use it as a visual, kind of a verifier. One of the things I'm looking at the moment is this correction that we're seeing on a little bit more of like an ABC pattern like this, which I would consider an expanded flat pattern is what they would call it. It's basically a 3, and then a 5 to the downside. And it came down here and hit this extension zone. So basically once we broke this 13.8 to the upside, my fibs come into play, and I like the extension here between 16.5 and 18. And this is when we kind of broke up, came back and retested right here and went up. So this is a pretty important time frame to really get us into a different realm. And we've been trading this realm for a while, but we came back down and retested this area. And that's, you know, that was my first buy at 17.7. I think the last time we talked. But then we didn't break. Yeah, and we didn't break the bull zone here, so we had to sell out. So we're still to the downside. So what happens is this area right in here for the wave C could come into the back into the zone and maybe even make a little bit of a lower low. But the bottom of this is at 16.5 right here at the end of at the bottom of this. But then the previous low is at 16.2. So somewhere between 16.2 and 16.5, which works really well with that 16.3 and 16.4 based on some of these other fib levels that I'm looking at, come into play right at this point. So if this comes down and reaches into this, and I just got this in here for the end of September, that we could be working or finishing up this wave C to the downside here. And it also is in between the zone, the zone here when we made a new low between 20 underneath 29 here. Once this broke here and then held and worked its way to the downside, pretty wide zone, but this area in here is well within this zone. So I do like this as that spot to find some buying interest to maybe turn this thing around. You know, Elliott wave rules are basically we got this wave 1 right here, and then we had this wave 2 right here, and then we had a large wave 3, and then this expanded flat could be the 4. If we get below 13.868, this would be wave 1, and wave 4 can't retrace further than wave 1. So that would be disastrous. Then I would have to throw all my drawings out and restart. But at the moment that it could go down as far as that. And as long as it doesn't get underneath that, that could be the end of the wave 4. So something
just to clarify,
yeah.
Is this on a wick basis or on a closing basis?
Wick basis. All it has to do is get below
Okay.
that number. Yeah.
Okay.
It
Interesting.
doesn't even
All
have
right.
to settle or anything. Just intraday trade
Gotcha.
under. Yeah. It would, if you go by the rules, it all it has to do is break it, regardless of how.
Interesting. Okay.
So the 13.8 could be a possibility that could come down and test that area, if we don't find enough buying interest around this spot. But I really like this, that 16 area based on some of the extensions, some of the trend line breaks, even on the daily has that 16.3 on its extension. So I really like that area as a spot to watch. But it could go to 13.8. And another thing I'm looking at is, let me pull this one up. I was just looking at just this crap that we've been doing since June. Just looking at this range in here, I was kind of looking at a timing of when these lows hit here, and it was looking really nicely. And it's still, and we had a little bit of transition in here, but we came back down, touched a little bit of a low here, kind of went up, came back down. So the next timing on this is right here, which gives us around that 18.7 or so. And maybe in the next few days, we get back down into this range. And maybe we continue this into the end of September. Well, this is September 13th, which if you take this was just a period of consolidation and then it broke down. But this move to the downside on a trend-based extension here shows, if you look at the red here, the 61.8% brings us at 16.6. So if it goes up, comes back down, and makes new lows below this point, that 61.8% of 16.6 is something I'll be looking at. Also, if it makes a new low below this point in here, the extensions are between 16, I think 16.5 and 17. So that 16.6 at the bottom of this range would be a spot that I would look at, and that's why I got this marked. That maybe we work our way down into the middle of September, into that 16 area. Now, if it gets 3 settles underneath this 141 at 16 whatever, the 200% comes into play at 13.3, and then maybe the next timing, at the very end of September, if it gets really ugly, maybe it comes down and makes a low at this point. So I just was looking at the timing of these lows, and so far it's working pretty well. So I just want to kind of, not that this is going to be working out perfectly, but it's a nice guideline to show that if this kind of keeps the timing to the downside, maybe that risk is still there. And that's why I'm really kind of waiting to buy around that 16.7 area as that first spot that I would look at. And given that, when I go back to my 4 hour, I'm either going to buy at 16.7 or so. I want to be just above all that range. I don't want to miss it in case it wicks. But 16.7 is the area I'm looking at. Or if the 4 hour gets into a new bull zone, those are my two buys at the moment. So I've been trying to do a little bit on the short side here and there. I don't have any plays on at the moment. I've just been too busy to follow it. But right now the downside's still there for some short plays. But for the long side, I'm waiting for 16.7 or a new bull zone on the 4 hour, and of course on the daily. But that would be really nice. Another timing real quick. This is just a modified shift pattern that I've been looking at. Another thing is that we're breaking down below this line here, which we tested back at this point. I have this arrow on here because it's the same kind of thing. When I look at the 100% and then you look at the extensions, these two red lines are the 127 and 141. And this is the 100% right here. So if you take that fib extension into there, you bring into this zone, which if this breaks down, this is that previous low at 16.2. But if you get down into this area over the next, few weeks into the end of September, we could be testing the bottom of this extension, and hopefully this extension will hold and work its way back to the upside. Just like you do on any of these other extensions, when you go from 100% and you look at the 127 to 141, that's what I'm looking at. Whoop, go back here. That's what I'm looking at on this zone. So even on this gives you an area of buying interest at the bottom of this zone, which is basically right now about 16.7 up to 17.4 along this line over the next few weeks. So that timing works pretty well on this too. And the reason I like this one is because it's worked really well back in history, hitting some of these, flip to resist or flip to support, broke here, held support, didn't have 3 settles underneath, came back, had 3 settles underneath, no 3 settles there, worked its way to the downside. So all of these timings and touches have worked really well, telling you when they would break down or not. Nice guideline. I don't trade off of it. This is sort of like the Elliott wave world to me. I use these as guidelines to help me with my fib model, because if my fib model is showing one thing and the wave patterns are working the way they should based on rules and guidelines and those kind of things, it gives me comfort to know that I'm able to go long and not worry about it and just follow my plan, that kind of thing. So that's where I'm at. I've been rambling for a while, but hopefully I kind of laid out why I like 16.5, 16.6, 16.7, somewhere right around that range as the area to buy. So I'm really looking to see if that's going to happen. But again, like I said, ride the trend, and trend's your friend. I'm riding the trend to the downside until it tells me otherwise. But right now that 16.7 is where I'm looking to buy, or a break to the upside, of course, on my zones here, if it's going to happen. But right now it's not showing signs of that. Price is going up, momentum's going down, so bulls really aren't getting any strength at the moment. So I like the resistance here to work its way to the downside. So
beautiful. Okay.
Hopefully this isn't all confusing, because I'm like, it's all different time frames and all over. I'm trying to lay it out.
I think you did a masterful job there. That was masterful. You brought us from short-term time frames all the way to the monthly there. Yeah, man. So the viewers on this channel, I think, are pretty familiar already with what I'm looking at, but there's several confluences, not just for September, but also around that 16, maybe even a little bit lower than that, potentially to $15,000 low. I'm looking at accumulation distribution indicators. I'm looking at there's actually potential quarterly hidden bullish divergence building up. Obviously, that that remains to be seen until another couple months when it actually closes. But these sort of things accompanied with each other gives me the sort of idea that scenario we could potentially be seeing a low in September. The low will very likely be lower than where we're at right now. I just thought that was super interesting, Max. We're coming at it from completely different angles here and getting very similar results. And what also I like about this, and maybe this is a bit of ego speaking here, but what I like about this is that it seems to me that the market is very black and white right now when you think in terms of sentiment, right? There are people who, I think a few people think that the low is already in, fair enough. But many people believe that the low will be between like 10,000, or I think it's like 11,000 to 14,000, which I'm of the same opinion as you. If things come back below, 14.5 to 14,000 bucks, I think we're going to see much lower. Of course, there's going to be bounces along the way, but that's kind of my line in the sand for, hey, this market's not just bad, it's fucked, and it's fucked for a long time.
Yeah,
so
exactly.
I wanted to quickly ask you just a few questions. I don't know if you have time limits right now. I know that U.S. markets, it's got about an hour. Okay, so first things first. Obviously, we can take things to extremes, and the worst case scenario is 0 in the next second, and the best case scenario is a million kajillion in the next second. But in your opinion, what's the most reasonable best case and worst case scenario coming into the end of the year here?
Best and worst case.
Yeah.
Worst case, I think, would be probably working our way back down to the 10K range, maybe 11.
Wow.
Because I mean, this will be my worst case. Take September out of it. If we end up breaking down even further, the next extension down there to me is 11.8. I haven't looked that much further lower than that. This one right here is at 10.8. So 10.8 to 11.8, I think, could be my worst case scenario as we move into the rest of this year. Because we could get down to a low, not in September. Don't look at this on that. It could be something that maybe we're just screwed and it works its way into this next level here, which is December, or maybe it goes into March of 23, and we just continue this downtrend into 10K. So maybe as we move into that next year, that 10.8 to 11.8 range would be like kind of my worst case scenario.
Gotcha.
Best case scenario is the low is already in, and the daily right here has already hit this extension, and we've already bought from that. Has not made a new low. So as we came up, went into my bull zone here, and then it broke down into the bear zone, but the extension has held. So when extensions like this hold while you're in the bear zone, that's a good sign.
That's a higher low.
Yeah, and it doesn't break. This doesn't break down to the point we don't make a new low.
Right.
So if that's the case, then I think we could break this trend line to the upside and take those measurements that we were looking at earlier and just go this direction. Just roughing it in here, but taking the furthest point to the trend line, just take that same rate of change and just move it to whenever you break out. But just say if that holds, we're going to be breaking out sometime. So you're looking at a possibility of, depending on when we break. So maybe we go into September and then makes a low at that point. And then maybe it breaks out, middle of September or somewhere around that point, and we get that rebound. Then I think my best case scenario by the end of the year would be something along the lines of this trend line break, which would bring us back up into the 40s. That would be like a best case scenario. So then we would,
of course, we're talking about extremes here for anyone listening. Don't get carried away.
Yeah. So not that it would just break this trend line and go straight to 43, but then you would have to, hopefully it would start establishing some sort of trend line of some sort go in this direction, and then you'd have a new support guide. I mean, this is all guessing because you don't know what's going to happen, but
right.
But if it does end up breaking the trend line, just depending on when and where it breaks, maybe it goes into October and it doesn't break until then you're looking at 37, 38. But it's going to be really maybe this trend line break to the upside. Now, if this actually comes up and breaks this 27 pretty soon, with this not making a new low, that could push us up maybe even higher into the end of the year. But you're probably talking, back up into these highs, 48, 49 as your best case. But I'm not going to hold my breath on either one of those, really. I don't really think 10K is in there. I really don't think 48K is in there either.
I'm of the same opinion.
But that's my low and high for the end of the year.
Yeah.
But like I said, I'm not like when I talk about, let me do some clarification here. When I talk about looking for a September low, I am by no means a bottom picker. I am not a person that's trying to find the bottom. There's a difference to me. I'm not trying to buy that exact bottom. I'm just trying to find that area that I feel, or when I do my analysis, is that pivot point of psychology. So that's what I'm trying to measure. So if I get the low, then great. That's awesome. I nailed it. That's awesome. Pat myself on the back and move on. But I'm not trying to find the low. To me, that's an act of futility, and it's just a waste of time. I like to do the analysis. If it comes to fruition, that's awesome. But then again, if it doesn't, then back to the drawing board. But I just like to put that out there, because trying to find the low and trying to find the high is really, really tough, and you're going to pull your hair out trying to figure it out. So.
Yeah, I mean, theoretically, only one person really gets to buy the actual low to the person that gets to sell the actual high. Is that on social media like Twitter, YouTube, whatever the fuck, people make it sound like they're perfectly trading these moves. And the thing is, you don't need to buy the ultimate low to make a shit ton of money, nor do you need to sell the ultimate high to make a shit ton of money as well. Again, for anyone who's listening right now, take it from FiboSwanny, who's been doing this for 20 plus years successfully, which is quite difficult to do, quite fucking difficult to do. And, just taking some meat out of the move, that's the idea. That's why you have a system. In your case, you have the RSI system, which is actually really, really cool. For myself, I have my own systems, obviously, but we're doing similar things. Just like, I want the high probability move. I just want a chunk of it. And then, put the fish back in the water. That's the idea. I just wanted to ask you like another couple quick questions while we're here, you know, just shooting the shit basically.
Throw them
But
out. Yeah.
I'm curious. So you've traded basically all markets from what I understand, right?
Pretty much over the years. Yeah.
But would
Yeah.
you say that Bitcoin trades closer to like a forex pair or a commodity?
Um, right now, I think it's more along the lines of a forex pair at the moment for
Interesting.
me, and I'm going off of that based on how I attack those markets when I do my analysis. The
Hmm.
analysis seems to be pretty uniform to how I approach the forex market. Commodities are a little different on my approach because of the because I'm when I talk about commodities, I'm talking about futures. So
Right.
to me, there's futures settlements. You know, you got your continuation charts, but commodities settle every month. So those kind of
Yeah.
mess up. You have to approach it a little differently. Um, Rules and guidelines are the same, but there's some nuances that you got to kind of work with. So to me, the way I approach it, it looks a little bit more like a forex pair to me. And
Yeah.
maybe that's something along the fundamentals of it too. Forex, nobody knows what the hell is going on in Forex anyway, because there's so many different variables that go into figuring out what the price
Right.
is. Unless everybody knows exactly what GDP of every country is going to be. If you got that model, then you're genius. But but to me, they rely on it weighs on a lot more on the technical side for self-fulfilling prophecy type stuff. But then also when you
Mhm.
start digging deeper, you're going to find patterns that people don't see on the surface, and then to me that's where the gold is at. If you can do some analysis that people don't see on the surface, like my threshold theory, for instance, I'm taking
Yeah.
fib levels from levels that people aren't even considering, because
Right.
why in the hell would you put a fib there? You know, like that kind of question. Um,
But it works. It works.
yeah, it does. It's weird, but it's not something I just kind of just said, "Oh, that works." It took a while to figure out,
Yeah.
but to me, it matches up with that forex pretty well on how I attack it.
So you just kind of touched on some there, you know, like knowing the econ numbers essentially. I'm just curious when we do have, you know, economic number releases like we're going to have this Friday. Do you have any sort of like protocol to deal with at those times, or do you just still play the model exactly as it is? Do you maybe not play it at all when these sort of events happen? What's your sort of take on that?
Um, I approach it as I stick to my model. Um,
Okay.
I really don't give a shit what they say or do, but that's
Yeah.
just me personally. Not to say that taking fundamentals into it and trying to figure things out and running a model that way, totally go for it. Um, the way I have things set up for me is my models will tell me if that news matters,
Hmm.
and if the market's going to react to the unknown or the actual news, um, that kind of thing. If it starts to break out uh, based on my model, that's when I care. And then it'll give me the signals to go in and out. So in other words, um, it doesn't matter to me. A lot of it's maybe it's just that I've been doing this so long and I got classical TA just freaking ingrained in my head that that first tenet of TA is that the market discounts everything. And if I kind
Right.
of still follow that, then to me, it's already in there. So I got to just go with what the indicators are saying. But that's just me. I'm not
Gotcha.
saying that that's the right way or the only way. That's just the way I approach it because it helps me take out the emotion of, well, if they do this, then this will happen. If they do this will happen. So it kind of
Right.
gets me into that thinking of I don't have to worry about that. My model will let me know if it matters, and I just kind of go with that. So that's,
I'm right there with you,
but you got to
man.
trust
Like,
you got to trust your model though. You got to trust your plan. You got to stick to your
yeah.
plan. You got
Well,
to have the right shit.
naturally,
All of that, you know.
of
So
course. I mean, naturally, when you're testing it, like those events should. You know, I have the same opinion as you. Essentially, in this, you know, when I realized that, like, you could have all of the numbers in advance of what the GDP and shit's going to be, and you probably wouldn't know actually how to trade it properly, anyways, because the market interprets things differently. It has to be within context, so it's very
yeah,
difficult to make a living that way. At least from what I've seen, I don't know anyone who, you know, fully only goes off of, you know, those sort of, you know, economic events. I wanted to ask you one last question here. I do want to be respectful of time. Also, I realize that traditional markets are going to be opening up relatively soon here. So with your strategy, you've been running this for how long now?
I don't know. So
That's a good answer.
I want to say like
I'm guessing years.
Yeah, 7, 8 years maybe.
Okay, 7, 8 years. So within that 7 to 8 years, like, would you say that you've made a lot of modifications, or do you make modifications to this day, or is it more constant and steady?
It started off. Basically the only modifications I make is because when I go to make the bull and bear zones, which takes a little bit of analysis to get the zones. But what happens is if you break every time it breaks into a bull or bear zone on the things that I'm trading, I'm not going to go and do every coin out there, but like every one that I'm trading, I will look back to see if once it makes that new threshold, I'll look back to make sure that that is still the best fit zones. So in other words, there's not a lot of maintenance to it. So in other words, if something happens in the market over time, and because what I'm measuring is psychology, and of course there's fear and greed, and then there's fear and greed, but there's different ways and different players in each market. I look at everything separately because a lot of people will talk about the dollar and the S&P and are we correlated. I don't actually care about that. I look at actually.
I couldn't agree more. I could not fucking agree more.
Because to me, I'm measuring psychology. So the players that are in one market are different than the players in another. And I'm trying to measure where those pivots of the sentiments are. And that could be completely different in different markets. Can they correlate at the same time? Yes. Right. Can they break down? Yes. If one breaks down, and if I look at them individually, then I know that one's breaking down and I can trade off of that one versus, well, this one's moving this way, so I should do something different with this one. I don't want to do that. Right. I want to look at them separately. So that's the way I kind of approach that.
That makes a lot of sense to me because if your strategy is basically based off of, human psychology and symmetry, well, human psychology hasn't changed in fucking hundreds of thousands of years, and symmetry is symmetry, right? So these sort of things I feel like are probably the best things to actually be trusting in. But yeah, just on that last topic of the core, it's very interesting to me. It seems to me that people want to, have like very sophisticated analyses and hey, more power to you. That's amazing. And definitely there are things there. But as far as like when you're actually at your desk trading, I just don't see that much value in trying to wrap your brain around like trading fucking Dixie versus Bitcoin or whatever the fuck, because Dixie is putting this move right here, and then that means Bitcoin's going to do this over here. It's like, look, just trade the goddamn chart in front of you because that's one that's going to be marking your P&L at the end of the day. Like, obviously these things are correlated, but I just feel like it's making things
actually
more complicated.
Throw the screen back up. Throw the screen back up real quick. I'll show you the dollar.
Whoops.
There we go. And basically, this is me looking at it separately. Now, some people will say, if the dollar is going to continue to go up, then Bitcoin could go down, right? That's basically what people have been saying.
It's black and white.
Yep. So when you look at my model here, the zones that I have went into the bull zone right here. So we've been to the upside, actually hit the first fib zone target. So if you were buying it here, you sold it when it hit into this range. Depending on when the range where you wanted it, but this previous high right here was in the range. So that's exactly where the sell was. So now it's working its way back down. Now the shallow fib is where you buy. And it's been holding the bull zone here. It's touched it a couple times as this, even on this wick down and testing this shallow fib area. And now there's also moving average there. That's where the buying interest is, and the bull zone's holding. So if you're trading this, the next move is a hold here with a move up to 111. So if that comes into play, then maybe Bitcoin goes to the downside. I don't know if you look at it from a correlating standpoint. I look at it separately. Separately, this holds, and I'm looking to the upside for the dollar at the moment. Looking at it separately. So does this move to 111 makes Bitcoin go down to 16 or lower? Maybe, I don't know, but I'm going to look at them separately. Right now I'm trading this to the downside. I'm trading the dollar to the upside based on the shallow fib being tested as support. which is a buy, and then the test, maybe retest the highs there. I look at the stock market separately. I'm still looking at a breakdown being in the bear zone here. This move to the upside it should be a stall into further lower down.
Yeah.
So I'm looking at 3807 to 3839 range as a possibility of a low there. That kind of thing. ETH, same thing. Hit the shallow fib, still in the bear zone. This is a sell, work our way to the downside, those kind of things. So I'm looking at everything separately, but I don't know if this goes to 111, maybe Bitcoin does go to 15K. I don't know. Or
you're gonna judge that off of Bitcoin's chart, basically.
Yeah. Yes, exactly.
Not off of Dixie.
Yeah, exactly. Yeah. I'm just showing you what I'm talking about. So I'm looking at things.
Gotcha.
It's a little bit more manual look. And I'm old school. I like to be in the chart. I like to actually be looking at what I'm trading. I want to be involved in that asset when I'm doing these charts. And then I'll move to the next one. Then I'll move to the next one. If they correlate together, that's awesome. If they don't, then I got to stick to my plan and go with what that psychology is telling me in that group. So that's
beautiful.
That's just the way I do it. I mean, it's not a right or wrong, just how I approach things.
I mean, it makes sense, man. You want to be as specific as possible when it comes to what you're actually trading. It makes sense to me, at least. But yeah, man, I think that's probably a good place to end it, unless you have any other closing notes. As always, you can always find FiboSwanny's links in the description below. Strongly recommend. He's one of the only people I can actually get behind and recommend and say, hey, here's a guy. He's legit. Check him out. You'll learn something at the very least. But yeah, anything else?
Nope. That sounds good. Thanks for having me. Yeah, I'm this is just a moonlighting gig that I'm just trying to help people. Not that you have to use the threshold theory, but a lot of the guys that are in my Patreon group like to use it for their own stuff. And that's really what I want. Yeah. I want people to take what I have, build from it, figure your own shit out. Figure your own risk management out and run with it. But I'm more of like a kind of a coworker. I'm not trying to be in this group that I'm like, do exactly what I say. It's more along the lines of let's learn together. And if you guys have something that I can enhance my stuff with, yeah, I'll test it and work it out and try to figure things out, and vice versa. Take what I'm doing, see if it helps you, that kind of thing. So it's kind of a two-way street. So that's what I'm doing.
Exactly, man. And that's something that it should be. I mean, obviously we are all slightly different in our trading personalities because we all have different preferences. We all have different time frame preferences. Different preferences is what we're actually trying to do. Hold, hold, scalp, these sort of things. And you're naturally going to be different than someone else. So the idea is to take something that actually works, iterate it for yourself, find something that actually works for yourself, and then boom, you got something special. And I can say full-heartedly that I've learned a lot from you just by watching you, just by speaking with you. And it's added a lot to my own game, even though I don't play things in the exact way that you do. It's been very, very valuable for myself. So just wanted to thank you for that, man. Wanted to thank you for coming on the channel as always. Like I said, all of FiboSwanny's links will be in the description below. I believe you're most active on Twitter and kind of trading view a bit as well. Have your website there too. And other than that, man, thank you for joining us. It's been an absolute pleasure.
You bet.
Love, my friend. You take care.
All right, you too, man.